The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you guys are doing great. As we know, the Bank of England getting the printing presses rolling, buying back the treasuries, the whole 9 yards. Same old game as somebody had coined it in the den. Where does it stop? Hey, there's going to zero is now not the statement, I guess. It's going to the basement, which is below zero. Unbelievable. Obviously, the dollar getting a little bounce off of that. Let's just go right into the currency here. Had a nice little bounce off of the 130.78, 130.19. That was kind of the floor there. And then when you talk about printing money, obviously that's going to drag a currency into devaluation state under normal conditions, and that's kind of what's going on this morning. But you've got, you've got an inflection point to pay attention to, 130.78 down into that 130.19. Those are the weekly and daily big numbers there. Not piercing it, but, again, we talked about that being the big play defense area, that DMZ down below. But obviously, what else are they going to say? I mean, they're pulling out of the European Union. It's going to take, I love how they use the word innovative measures. And this is an innovative measure. You didn't think they were going to raise rates, did you? So this is what happens. So how do we deal with this now? Again, I think you've got some opportunities down here. This thing, in my opinion, should have reacted a little bit more on the downside than it has. So take that for what it's worth. Again, you've got a chance to play defense on the long side down here. Euro, let's see what's going on with that one. It's also affecting gold. It's also affecting quite a few things. So the euro, again, this is kind of my long-term play downward. If, God knows what these people are going to come out with, the next rhetoric. But, again, the race to zero is now race to negative whatever as far as rates go. The yen, not reacting too much to this. But, we talked about this, the entire fair auction being explored here on the yen. This is concerning as heck to me. This thing does not want to seem to bounce whatsoever. Looks like it wants to plow through this 101.33, 124.25 area. That's going to be short-term bounce area. It's a long-term inflection point, but you may get a little bit of a bounce like you're having now. But again, I mean, it looks like we could possibly just flush this thing just to run some people out of town before it may reverse, and then the Bank of Japan may start even more significant rhetoric when it comes to plans to, I guess, print money, for lack of a better way of putting it. All right, so going back to the British pound, I think we summed that up. The euro, we talked about the Japanese yen, the Australian dollar. This has been one of my favorite trades. Again, I don't think this thing's near over. You've got 76 and some change, 77 and some change. Let's just call it 77's ultimate targets on this. I love how this thing this week came back again and retested that unfair low on the weekly, 74.81. I think, again, this is more of a long-term deal here. And here's the 240s. As you look at the Australian dollar. So let's hit gold really quick. I want to talk about this one. When you have just the default kind of reaction, what's the value of paper? And this is kind of one where it's like, don't spit in the wind, what's that song? Don't mess around with Jim, and don't short gold. That's the three biggies right now. So here's the weekly unfair high. 1366 is the December contract. We flipped over to that. I was still hitting the August too long here. But as we, exactly, Jim Croce. But as we look at this, I don't see any reason whatsoever to be short this thing. That's the low probability trade. And it looks like we easily can now reach on a relative scale relative to that August contract, now the December contract, 1384. 1384. That's the next target up. How do you play defense against this? I think you kind of use the 240s here. This is kind of what's happening since we started that move off the 1315 off the August contract. Again, you know, you find support on these things. Again, where do you play defense? I think you got to give yourself a little bit of a generous stop here and just let this thing unwind up top. 1384 crude. A little bit of a pop, but the good news is now you've got a new profile and you've got a new range that could all of it be explored. You got a chance to, if you're trying to get long, I think you've got to wait. 39.71 might be a little bit of a support situation on the September contract, and 43.33 up top is the inflection point to pay attention to there. Yeah, I think gold can go a lot higher. A lot higher. The 10-year. The U.S. with God knows. And how do you factor in the political scene to this? I mean, I don't know where to start. I'm not going to get into politics today. We're going to avoid that. But when you have an intervention, I guess it's going to happen. And then you got the other side that seemingly has problems too. I mean, whew, wow, what times? Gold. That's what I'm trying to say. Gold, gold, gold. So the 10-year, looking at the 10-year, here's the inflection points, 132.28. I actually think this can go higher. Believe it or not, I think you just got to ignore any kind of crap coming out from, hey, they're thinking about raising rates. I mean, technically it is what it is. I mean, don't overthink it. We're in an uptrend. Gold is probably the easier trade, though. Incredible. Let's take a look at Tesla. 13th straight quarter. Not making money. Nobody seems to care. Here's that big area we talked about getting to 2033. I think we can just kind of travel down from here. A stock that you know, is not super market dependent as far as beta goes. But again, I think we reached this apex. We talked about that. Stop still above, and I think we could just kind of mosey on down here on Tesla. Guys, we'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And they say you don't tug on Superman's cape, you don't spit into the wind, you don't pull a mask off an old Lone Ranger, and you don't mess around with gold.
Thanks, Al. Hammering the point home. Don't mess around with gold right now. I agree with some of the guys in the den there. I think this thing's headed north in a big way, even after this decent move up. Let's take a look at the S&Ps. All right, here we go. Now, going back to the scanner, had a little bit of a mixed bag here. I was expecting more of a follow through here below this 2152. That didn't happen. Again, I got clipped a little bit on this one, but that's okay. You got a little bit of a external situation going on here fundamentally with the British pound news here. So we're gonna have to just kind of wait and see now. There's really nothing to hang on to right now, and I hate getting clipped myself, but it is what it is. We try to put the odds in our favor. We try to look at things, spinning around here, around the globe. Look at our net breadth calculations. Here's a daily here on the globe right now. That's what's obviously as of some closes yesterday. S&Ps are open up a little bit here, but I'm still standing by this. That there's not a lot of leverage here on the upside at this moment. So not excited about going long and just having to wait to go short. All right, DAX. Here we go. So again, got pretty big support around 10,000, 10,200 on the long term, 10,200 to be more exact. A little bit happy this morning, but you're gonna have to keep your eye on the British pound, the euro on that one. I'm expecting the euro to come off. China just literally, I mean, how'd you like to be trading this? Let's see, how long have we been just kind of hanging out here? Since February. In the long-term range here, bouncing off of the profiles, as you can see. Got a new thin profile edge and higher here, but again, I mean, this could get destroyed. Nothing to really write home about here. A couple other things going on here. 30-year safe place, U.S. Nothing Nothing unsettling happening here, especially on the political scene. This is the 10-year, or excuse me, the 30-year, kind of similar to the 10-year action, a floor at 171.19. Just since things are going to basement levels below zero, except in the U.S. when they keep yapping about a rate hike that never happens. I mean, there's your hopes and dreams. So again, really, really scared to be short these treasuries. And it keeps proving that's the case over and over again. I mean, if we get a pullback in treasuries and start breaking some support areas, I'm still not exactly excited about trying to even short this. Gold moving up a little bit here. Let's take a look at it while we're talking. Don't mess around with gold. I think, again, if we can get above, have a close above the 1366 area on the December contract, I think, we're in for another leg up, at least to that upper area, 1384, and I think a lot higher. 1420, I think somebody said in the den, that's where I think Tom has been talking about possibly for a target. Hope I'm not quoting him wrong. XLF, a little bit of noise this morning. I think that will print 2368. Again, not excited about being long this sector, and we've talked about some short opportunities there. So let me hit a couple other ones here. Time Warner, TWX. These are some earnings related stocks. Okay, so here's the action after the close. Got up as high as 79. So just want to point this out. Again, using inflection points here, 79.24. I don't think this thing's really going anywhere. I don't think the market's heading north real quick here. So again, daily unfair highs, weekly unfair highs hit and kind of backed off. What do you do with this now? I think it's a no trade. Again, trying to buy strong stocks and sell weak stocks. This is really not meeting any of those conditions right now. All right, let's take a look at RIG, Transocean. Up a little bit here, 1059. Here's a good example of kind of waiting to pick your battles around some of these inflection points. Trading up a little bit here, 968, a little bit of a floor there. I think crude has got a chance to play defense here. It could travel north a little bit. Some of these stocks could lift up in the XLE. But you want to be buying the strong and selling the weak in that type of scenario. Let's take a look at 21st Century Fox. All right, so 2653 looks like is where we closed. Revenue fell short, so nothing really. We're going to have a new profile on 20th Century Fox this morning, so you'll be able to see that in the scanner if you want to trade that, where we're headed with that as far as major inflection points. But, when you look at something like this, again, the long-term view on 20th Century Fox, it's a stock that's really not been participating lately. And if you've got some new inflection points on the daily, this is our weekly. And if you look at this, just kind of stepping back for a second, we've kind of had lower highs, higher lows, something that any type of market pullback, I think you've got something to hang on to here as far as the short side. Take a look at another one here, Square. These guys, it's up 14% on a narrower than expected loss. These guys do not make money. So here's trading 1243. So we powered up through into our first profile in this stock. And again, what do you do with it now? I don't think you can do anything with this. This is kind of a wait and see for another profile. If you're in the merchant account services business, you hate these people. You hate them. This is the race to zero of all times. NLY. Another earnings related stock. Looks like we're printing 1087 this morning. Okay, so again, just coming down into these weekly unfair highs, relatively strong stock. May have a little bit of a pop opportunity. You got 1055, 1081 to play defense against on NLY. HLF. Here we go. Herbalife. We're going to hit this when we come back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Okay, so taking a look at HLF, talked about this one. Let's see here. So 68.62, trading up a little bit here. Herbalife, obviously a stock not to be shorted, in my opinion, right now. You know, what do you do with it? I'm not a super fan of being long the market this minute. So again, we could get a little bit of a relaxing pullback here. 65.83 is going to be support on that, down to 63.59 in the long term. Let's take a look at the XLU really quick. All right, so looks like, is this a real print? Yeah. So 51.58 looks like we're trading right up around that unfair low on the daily. This is a little bit of noise around here. 10-year, 30-year moving up a little bit. Thirst for yield situation. I don't think this trade's over. It's a pretty boring trade, but again, you can go into the scanner and find some decent little opportunities still in the XLU, even though it's the seller dweller right now. If you're going to buy stocks in this sector, there's a scant few. Here's Wisconsin Energy. I like this one because we're just kind of sitting on weekly unfair lows. Might get a little bit of a pop again here. And again, not the most exciting situation again in the world. 63.63. Not a lot of opportunities in this particular sector. Some of them are just starting to break down. American Electric Power. But again, a lot of them are just pulling back to these long-term inflection points, AEP. Again, not exactly showing top there, but you get the picture. And let's take a look at uptrend reversals here, because some of these XLU stocks are obviously in here. So there's AEP, but again, you know, long-term takes precedence over intermediate down the line there. And even though we're showing kind of a reversal here on the daily, finally, you've got that big inflection point sitting here, 67.96 on AEP. And you'll see again, you know, looking down this list, you've got quite a few XLU stocks in uptrend reversals, but you still have some opportunities there. Let's go back into the ETF section really quick. Let's take a look at the XLE. Where are we at? Here we go. And again, you know, SWN, I keep my eye on this thing. You know, just incredible relative strength here. 14, 15 can play defense against. Talked about not shorting against that area. And then we get the little pop. So, you know, got decent support on this stock. I love how it's acting. If we get any kind of bounces in crude, you want to be in stocks like this. I think we got a caller, Dave from Clearwater. Dave, you there?
John.
Hey, man. How are you?
John, what's happening, brother?
Oh, man. Watching the politics at night. It's like going to the circus. How are you?
I got to tune it out, man.
I know.
You know,
I know.
I mean, this isn't a politics show, but I just keep thinking to myself, as a proud American, 300+ million people, and this is the best we've got to choose from. Really?
I know.
On both sides. You know, I mean, it's like, really?
It's crazy.
It's just like, it's like, how we find ourselves in this situation again.
And the market's sitting on all-time highs. Like, you know what I mean? That's what kills me. It's amazing.
Yeah.
Whatever. You know.
Yeah.
And you know, look at what happened. Look at what's happened in Turkey. I mean, they've had, you know, I don't have to repeat everything, but they've had a ton of crazy stuff going on, and their stock market's just been going straight up lately.
Oh, no doubt. It's just, you know, absolutely. It makes you, you know, I don't know. To me, it just makes you have a second thought. Remember that Arsenio show hall back in the 90s where you know, things that make you go,
Oh, yeah.
You know what I'm saying? You hear about, you know, the government agencies like the Financial Stability Board and the Working Men Group that Reagan put in the 80s, and you think, well, how can that possibly be? But then you look at the market action lately, and it's like good news comes out, or I should say bad news comes out, market goes up. Good news comes out, market goes up more. And it's just like you kind of wrap your mind around that, and it's just there's no, I don't know if I'm desensitized to it or whether that's really happening. I mean, just look at Orlando, right? This lunatic walks in Orlando, you know, about 90 miles due east of where I live, walks in there and fires the whole, you know, from as a former soldier, walks in there and fires the whole place up.
I know.
And you know, and it's like gold doesn't skyrocket. You know, I mean, it's just like I can't. Anyway.
I think gold's on the launching pad big time here. I think it's going to really freak some people out that are trying to play around the short side. I mean, I think this thing's just spring loaded right now.
Way. Yep, I see it the same way. I've been long gold through, not on the futures, but through EGL 2-for-1 leverage instrument, and I've been hanging in there. And when it dips back, I sell calls on it, and that's been a nice little trade that's going on for a while.
Nice.
But I got to thank Tom for that one. I mean, that's not my little brainchild. That's Tom. But
nice. What's on your mind?
Anyways, I got a question for you. And considering the mechanics, and forgive me, because the last thing I want to do is drive down your ratings by walking into the weeds discussing the software of the scanner. But as I get my head wrapped around this more and more, I'm liking it more. So here's my question within the context of soy meal, ZM, on the scanner, on the future. So based on how the software and the algorithms are programmed, it's a price and volume action. And based on that, you look for the peak point, the point of control, deviation up, a deviation down, which would be the unfair high and the unfair low. So considering that here's my question, considering that the majority of the volume, like on, I'm just using soy meal as an example, is in the pits trading from, let's say 930 to 220, it seems to me, wouldn't it have a profile on the 4-hour be very similar to that on the daily? And if you were to trade that particular instrument that only has about 4 or 5 hours of trading, that the 4-hour would probably be a more, how can I put it, a faster response time, or, I guess I'm not really answering my question all that well, but I'm thinking that on instruments that aren't traded, that don't have a lot of volume outside of a pit, that, pit open, pit closed, that it seems to be, it would make sense, because I'm looking at the soy meal specifically, and it's doing it's got a buy gartly right now, which is a pattern I picked up from Larry. And when I look at the 4-hour profile, we got an unfair low at 323. Looks like that would be good defense to play against if you had reason to believe, based on previous patterns, that we would see a trend reversal. Is that making any sense, or does this all sound like a bunch of nonsense to you?
Well, I'll tell you what, we're getting ready to get a break. Can we pick that up right when we come back, Dave?
Sure. If you want to drive your ratings down further, go for it.
No problem. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. Dave, you still with us?
Yes, sir.
Great. I'm looking at just November beans right now, and that soy meal contract is December, right?
Yes, sir. Yes, sir.
Okay. So, this has a major relevance to what's going on in beans in general. I'm kind of partial to doing nothing on these products right now. I think things are, the weather, the stocks, the blah blah blah, all the things that factor into to these particular markets is kind of baked in right now. I think there's not a lot of disturbances that can happen. So when I look at soy meal, and I look at what's going on, and let me pull up ZM here on our e-signal charts. And I understand your question. I'm gonna get to that in a second. I see a lot of headwinds on soybeans down here still on the resistance side, even if it kind of pokes its head up. And your question is on the 240s, right?
Yeah, it just seems that, again, if I understand it correctly, that the profile algorithms are driven by price and volume, and it goes into a little magic black box that the Chinese guy can have if he wants to pay you $50 million, or was it 10?
Correct.
Yeah, 10 million, whatever it is.
I'm kind of upset that I didn't take that, but go ahead.
Yeah, you should be. You absolutely should be. That's a good trade. Anyways, but I guess what I'm saying is since the majority of the volume is going to be done in the pit, pit's open from 9:30 to 2:20, I believe, if I'm correct on that.
Yeah, but these markets, especially the grains now, you can stay up all hours of the night and just kind of.
Yeah, but it's thin, brother. It's thin. There's more, a lot of times, I am watching this, man. I've been trading the soy meal, and I'm making some, giving it back, making some, giving it back, and just trying to kind of wrap my mind. I'm trying to branch out of something other than the S&P and natural gas, because I've been trading those things like it's my job. But
good for you.
Trying to branch out, man. I'm doing the Aussie dollar and and Canadian dollar, and just kind of branching out a little more. And then I've noticed on the soy meal, soybeans, soy oil, that you're right. The electronic trading opens up at 8. But the trading is very thin. It doesn't mean you can't make some money on that, because a lot of times it can just kind of float higher. You know what I'm saying, in a downtrend market, and let it do a Fibonacci sequence up, then sell it, and then then close it on the pit open. Little tactics like that I've learned from Tom, I've learned from Larry and Steve Rhodes. But I'm just, it just seems to me that for a pit, I guess what I'm saying is the majority of the volume's on the pit. We both agree with that, I would imagine, right? Mm-hmm. Okay, so 9:30 to 2:30, what are we talking, 5 hours? So it seems to me that instead of, like, if you were looking at a little longer term play, I know your trading system, you'd like to see it close above the nice wide price spread movement above the unfair high, have it retrace back in, test that high, because you said, heard you say that you're not trying to catch the bottom tick And I wish I could get off that kick, John, because I'm all about catching the bottom tick. And sometimes it hurts me more than it helps me. But
well, you got to remember. You got to remember this. It's not time at price. It's volume at price.
Right,
so like,
volume at price. Did I say time? My bad.
No. I'm just kind of reminding you and everybody else of something that, even if you're talking about, these little gyrations that happen at night, if they're not kind of full of volume, that's not taken into consideration a lot building these profiles, because remember, it's volume at price,
right,
instead of time at price. So if it stayed up at, for instance, on meal, if it stayed up at, at 350, if there was a weird wacky print that went off at 350, like one tick or something like that, it's not going to affect really the grand scheme of things, being that intra pit sector that you're talking about really has the most relevance, and that's still kind of factored in here. All things considered, looking at meal and beans right now, I don't see a lot of leverage here to get long this thing. I mean, I see more kind of almost just sell the rallies, and so I mean, I'd be looking at meal, 333. And that coincides with that daily. That's the 240 unfair high, and coincides with that daily unfair low 334. So I'd be kind of more interested in, waiting. Again, we talked about, I think, gold the other day. Somebody was, hey, is it time to short this around 1360 something, whatever? No, because that's probably the riskier trade. It's in an uptrend. I mean, this is the polar opposite. It's in a downtrend. You kind of want to wait for it to rally up into these resistance areas, former support, now resistance, and that's just kind of the way I'm boringly looking at this right now with you.
Right.
So
yeah, that's the thing about the like a lot of these Gartley patterns is that it's a decent attempt to grab the bottom tick or the uptick. The top tick in a reversal.
I'm glad you said that, because the cool thing is, in my opinion, that if you can get some kind of, all right, well, that's a Gartley pattern. They're super powerful, and here's the point of reference. But if you can get some confirmations, maybe also from some profiles that we look at, that would be even more powerful.
Absolutely.
And slowing trades down, as I've talked about a zillion times, probably to the point where people are maybe angry that I mention it so much, is slowing trading down is not a bad thing, and sometimes doing nothing is a position in itself. Yeah,
no, I hear what you're saying, and I've taken it to heart because I like trading, man, and I've been forcing myself through self-discipline to slow down, take a more methodical approach to it, because I'm ramping up on it, and then I'm drawing my account back down by moving trades too much.
I'll tell you something that I don't mind paying tuition to remind myself of, and guys out there are probably gonna go, man, what a wacko dummy. But every once in a while, when I feel like, I just want to be in the market and I want to maybe see things that aren't there, I'll be honest with you. I mean, there's so many opportunities trading Nadex, but sometimes I'll throw, and you guys might have done it. I'll get out the debit card, throw $100 in my Nadex extra account, and say, I'm just going to burn this up, winging stuff around until I get angry with myself and lose the $100, and then it's out of my system, and then I'm like back to patience. And I know that's crazy, but I'd rather lose $100 doing something kind of nutty there than to kind of get a little overactive in hardcore longer term setups that maybe aren't there. And that's just something I do every once in a while. That's probably crazy.
It's not crazy if it works, man.
Well, it kind of reminds me, and I don't mind paying tuition to remind myself that, hey, this is a patience game. There's a lot of computers out there that have kind of got it licked when it comes to some of this short-term noise, and I'm kind of over it, really. I mean, so.
Well, I'll tell you what I think you might find would help with that also, along the lines of that, John, if I can make a suggestion to him. There's a great book that I know has helped me called Trading in the Zone by Mark Douglas. Read it.
Yeah, I've seen it. Yeah, it's good. Thanks, Dave. Thanks for calling in.
John.
Okay. Be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back. Dave, thanks for calling in. Yeah, I mean, sometimes I have to remind myself, and that's just, we all have little personal things that we do to try to keep ourselves on track. And sometimes I end up making money, which is not the best thing in the world. Get really active like that. Again, just to wrap up a couple things, crude could be decent little trade opportunity down at 39.71 on the September contract. I like how some of these XLU stocks or XLE stocks are really hanging in there. Going into the XLE right there daily. Again, that SWN trade, really, really attractive. Williams Company's WMB. Again, the reason we talked about this, in fact, yesterday before this happened, is, we're fighting it. I mean, we're fighting that crude trade when we come down into those weekly unfair highs, 22.78, and then lo and behold, we get that kind of deal yesterday, which was really nice. Here's the 4 hour. There's the 1 hour. I don't know if we're printing this morning, maybe. But again, some of these have just shown some killer relative strength here. Here's Marathon Petroleum. Kind of a similar situation, staying above profiles. Let's take a look at Diamond Offshore. DVN. Got better ones than that. Let's see here. Baker Hughes looks kind of like it could be sitting on the launching pad. Any type of moves up in crude could really bust this thing out on the weekly. Keep your eye on BHI. That's another one here. Cimarex. Interesting situation here too. I mean, you might be going, oh, well, wow, aren't we at weekly and for highs? Well, you got to look at the relative strength. And XCC, we've been here before, but it looks like we're kind of compressing up into it. And again, any type of help, you want to be buying the strong, especially when, you get the clarification, oil coming in like that. Here's CNX. Talked about this one too. Really holding up well. Did we look at Marathon? Yeah. Nice little situation there. All right. So to close here, let's take a look at the S&Ps. You guys, we got about a minute left. I'm not exactly excited about being long here. I'm just kind of waiting patiently now. I think you've got some edge to be short. But, again, 2152, you got to migrate down below. And, you've got some change in tone here with the 240s edging down for the first time. A lot of the internals starting to roll over on the south side. Gold, if you're joining the show late, huge fan of just getting long and strong this thing now. And now we can use some weekly and for highs, some very strong inflection points. Getting a weekly close above here tomorrow afternoon is just going to be terrifying for people that are short. Talked about the notes, talked about the dollar getting strong again. You guys know about the British pound. Let's just hit that one more time. I can't because my currency server is locked up. So, guys, look, stay tuned for Larry. It's always a pleasure to listen to for me and all the rest of the hosts on TFNN all day long. We'll be back again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.